Hello everyone. Now here is what I always tell you guys, that if you understand, if you know what price is doing at any point in time, you will always take advantage of it to make money for yourself. Now here we see that even though on this particular time frame, this is 5 minutes time frame, okay, there is an obvious bullish flag formation. However, your understanding of the fact that a series of high points and low points has to be made or created for a complete flag to be formed. That understanding helps you to take both sells and buys, okay, both sells and buys trades within this particular range that is formed, within this particular range, okay, that has given us the flag shape. Just as you can see, this is the pole and this is the flag, right? So your understanding of what price is doing, okay, especially early enough, helps you to take both buy and sell trades within that particular range up to 2 or 3 times, depending on when you were able to identify it, as price bounces off from either of the previous lows or the previous high points. Now, however, this understanding is not without the investment of your time in learning how the behavior of the market goes, okay, in learning how price behaves on the trading chart, okay. Now the truth remains that all the classic patterns, you know, right, they don't always play out the same way you have known it, right? That happens under ideal situations. The economics call it ceteris paribus, when all things are equal, right? Because if they were to always play out the way you know it, then nobody will be looking out, to trade, according to what price gives you. Everybody will become a multi-billionaire overnight. Now, if bullish patterns are always to go bullish, are always to drive price towards bullishness, okay, anybody that wants to trade will just learn classic pattern and learn certain things, and then just like bullish flag is a bullish continuation classic pattern. W pattern or double bottom is a bullish continuation pattern, bullish movement continuation pattern, and then inverse head and shoulder is a continuation, a bullish continuation pattern. But they don't always play out that same way, right? That's why you need to understand what price is doing at any point in time. Then you look out for certain things that are pointers or confirmation to the trading approach or strategy you are using. Then you combine a whole lot of things, okay. At this point, these are few things that are playing and are pointers. Now, this pointer, which of them are supporting my strategy? Which of them are against my strategy? The ones that are against my strategy, are they most likely to play out positively or negatively? These are the things you look out for when you are trading, and then you combine a whole lot of things. You don't just use one thing to trade, and as you do that, you gain mastery of that particular pair or whatever you're trading. So that's how we do it. Now, take a look at this particular bullish flag now. Yes, series of touches have been made to the upside and to the downside. That is the high points and the low points within that range. But then, in many cases, it doesn't price doesn't go bullish. Okay, in many cases, this can be violated, and price will keep going bearish, okay, will go bearish instead of bullish, okay, to continue the bullish movement. Of course, price has been on a bullish movement from here, as you can see, to this point before giving us this particular flag as we are seeing now, okay. Within the range, if you're able to identify early enough, you can take a sell down to this point when price bounces off from here, and then taking your profit, or at most, or at least I mean to say 50% of this range, and then you wait for price to bounce off again from the low point, and then you take a buy, and then taking 50%, or if you are able to hold your trade till price makes another touch on the high side, okay. Now you can take this up to 2 or 3 times. How many times has price touched the highs and low points? Okay, up to 3-4 times, okay. But then I advise you to take at most 3 times. That is if you are able to identify this development early enough, okay. So in some cases, it's likely price will still come down, okay, because there's a gap that has been created here already. Now a gap was created earlier here, okay, and this movement and price coming to this place, okay, coming up, came up actually to fill this gap, and by filling this gap, another gap has been created. And one thing about gap, as I told you guys in my previous video, is that gaps, okay, created gaps in most cases get filled. So I'm looking at price from this point now. It just broke this range, okay, but then there's a possibility of price coming back to test this. Now we'll begin to look at it if it's going to break into this particular range to continue bullish movement, or bounce off to continue bearish movement. Okay, that's just it. You combine a whole lot of things to trade. So that's basic. This is live account, just as you can see, a very small account, but this account have been tripled already. I mean, like almost tripled. Okay, and with just few trades. This is a live account, just as you can see. So this is CN Great Councils signing out for today. But don't forget that trading is a technique, a high level technique and skills that ought to be learned. And once you have learned it, you are ready to keep paying yourself on daily basis. Talk to you in my next video. Bye.
A few moments later.